This company is focused on the right stuff, and you haven't been able to say that about Hewlett Packard for 20 years or so. All right, welcome to the Drill Down Earnings. I've got the latest quarterly results from Hewlett Packard Enterprises, HPE. This is the business story behind one stock on a move. That stock is moving down about 4%. Why? The results weren't great. I'm Cory Johnson, Futurum's chief market strategist. We love HPE. We love the people at HPE. We wish the company would do a little bit better. These results were challenging. They're in all the right places, in AI, in compute, in software, and some of the numbers were good. So let's look through the actual numbers here about how the business actually did here. So $6.75 billion, call it $6.8 billion in revenue. That's down 14% from the previous year, 8% sequentially. But the business of recurring revenue, which is an important strategic change for this business, to have a lot more software revenue, have annual average recurring revenues now at $1.4 billion. That's up 41% for the previous year. So really moving aggressively to get things that they can count on while they push into AI and push into the highest, most expensive parts of the world of compute. Let's look a little bit deeper into the numbers. I talked to HPE's CEO Antonio Neri, I guess it was a few months ago. It seems like just yesterday because I like the guy. I'll put the full podcast link in our episode note here. But some of the things that are going really well for them. All right, accelerated processing units, and these are the sort of the AI processing stuff. They saw $4 billion in sales in the quarter. And again, as I mentioned, their software business, this annualized revenue run rate for their software infrastructure and financial services business, now at $1.4 billion. I mean, just fantastic. If you look back, 2 years ago, that was $640 million. So really growing fast. And then I want to dig into one business in particular here for this company, the Intelligent Edge. And that is their server business and some other things around networking, doing really, really well. $1.2 billion in sales, but operating profits of $353 million. I say it's doing well, not because it's growing so fast, because it's not, but the profits are growing really fast. 29.4% operating profit margins for that sector is really strong. But overall, the business shrinking, or at least reporting a not great quarter, and the stock took it on the chin. You can see the sell-off in the stock in after hours trading, and you can see kind of what happened over the course of the last year, which is not a whole heck of a lot. But they're talking about the right stuff, and they're moving into the right areas. And cutting-edge AI compute using large language models, giving companies the ability to do this compute, isn't something that the cutting-edge compute that you would have thought of HP as doing in the last, call it 20 or 30 years, when they were just, sorry guys, we're not at the cutting edge, and now they are. But they're pricing this business to gain business for the hottest, literally the hottest systems out there. The systems that are running really heat-intensive, tens of thousands of graphic processor units, GPUs, and then they're liquid cooled to run them. This is cutting-edge supercomputing, and it's exactly what Hewlett Packard Enterprise CEO Antonio Neri is focused on. Here he is talking about what their offering is.
The fact of bringing it together gives us the flexibility, opportunity to maximize the blended margin here as we go forward. To give a reference, when you sell an EX system, generally is a liquid cooled system that tends to gravitate to the supercomputing side or large AI clusters of thousands of GPUs. But an EX system supports today up to 80,000 GPUs in one system. And that's because of our interconnect fabric HPE Slingshot. In fact, some of those systems have 80,000 GPUs and maybe 40,000 CPUs in one cohesive system. But then you have other customers that may need 2,000 or 4,000 GPUs. And depending on which location they pick, they need liquid cooling. We deploy those in. Now, generally speaking, the XD platform, or the Cray XD platform, is the one that has the density and is more air-cooled oriented and ability to mix-match different configurations. And that's where the vast majority of the action is today in AI.
How much do you love that accent? Anyway, these guys are in the right place right now. They're pricing this stuff to sell, and they're trying to get those sales up going forward. But what does it all mean? What's your big drill down earnings takeaway? And what's one number that tells us a whole lot, the drill down earnings bite? We've got that right after this.
The Drill Down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
Here's a quick drill down earnings takeaway on the latest quarter from Hewlett Packard Enterprises. A really big quarter, $6.8 billion in revenues. I'm going to call it a really bad quarter, or at least challenging, because the revenues were down a lot, 14% on a year-over-year basis. This company is focused on the right stuff, and you haven't been able to say that about Hewlett Packard for 20 years or so. They're focused on AI, they're focused on compute, they're focused on recurring revenues in software and things like it, and they're starting to see those results, but they haven't been consistent enough yet. But there are some bright spots, and I want to focus on one of those. The revenues they have in their server segment, and this is your drill down earnings bite, the one number that tells us a whole lot. Those revenues, and it's not the $3.4 billion they had in revenues, 3.352 million, but it's the percentage of operating profit. 11.4% operating profit, very strong from a business that was only break even about a year ago. All right, thanks for listening to Drill Down Earnings. I'm Cory Johnson. Check me out, Cory TV, at Twitter. Drill Down Earnings, part of 6.5 Media.